Oil prices are now back at 2009 levels, and all indications are that oil is in for an extended stay in the tank. So here are four energy-related things to keep in mind as we head into 2016. Iran. The OPEC member looks to be at odds with the cartel's most powerful member, Saudi Arabia. The Western sanctions that have been on that country are due to be lifted next year, and all indications are that the country wants to produce as much as 1 million barrels a day more. And that's a lot of crude to go into an already oversupplied market. Number two are U.S. oil inventories. The Bakken region of North Dakota and the Eagle Ford area of Texas have seen some amazing growth in production, bringing the U.S. back to levels that it hasn't seen in decades for oil output. But since prices have fallen, companies have been forced to take rigs out of the field. The big surprise here has been the resilience of U.S. oil production and the fact that it has not gone down as quickly as many people had figured it would. And that's done nothing but put more pressure on prices in North America, affecting U.S. production and affecting Canadian producers as well. Number three is high-cost oil projects. Capital spending in Canada by oil companies has fallen 40% in the last year, and the Bank of Canada has estimated that it could go down another 20%. If oil prices stay at levels where they are now, that number could even be higher. So already billions of dollars of oil sands projects have been shelved, or at least put on hold for a while. And big surprise recently was Shell's Carmon Creek project in Alberta, where the company decided to shut things down even after construction had started. That's a drastic step. The fourth item is the oil economy. Canada's economy has teetered between recession and minimal growth for the last year. And as long as oil remains where it is, the risks to the economy grow. The Canadian dollar has recently fallen to 11-year lows against the US dollar, largely on the back of oil. In Alberta, there's been a lot of damage done already. We've already seen record deficits being announced by the Alberta government, and that is assuming oil prices are higher than they are right now. The oil industry has shed an estimated 41,000 jobs, and now all indications are that companies will be cutting back even further as this lower for longer school of oil prices remains in place. All in all, for oil markets and the Canadian economy, it doesn't look like the clouds are going to part anytime soon.